Hi guys, I'm going to talk about the interest rate rises in the property market for 2022 and what that means for property prices. My name's Adam Panisi. I've got a couple of $100 million of property developments on the go, and I'm based in southeast Queensland, and I'm just going to give you an insight into what's happening on the ground from what I see, and also what I think is going to happen over the next 12 and 24 months and maybe even beyond that. What we're seeing at the moment is interest rate rises. I'm not telling you anything you don't know. There's a lot of negative media press around Sydney and Melbourne house prices flattening. Now, what's actually happening on the ground is buyer sentiment has pulled back. So, buyers are spooked by a couple of interest rate rises, but I think it's a bit more than just what's happened. It's what's coming. It's that unknown. So think back into other parts of the market where people have had that suspicion or have not known about what the market's going to do for the next little bit. So think of pre-COVID, during COVID, leading up to COVID. So our property market, and I'm just going to be generalistic around the property market for Australia. The property market was fairly flat leading up towards COVID anyway. Certain capital cities were approaching or already in undersupply, especially in restricted supply areas. So when COVID happened and we had massive interstate migration and people migrating out of the cities, then that obviously put pressure on properties, and it also meant that you had multiple people fighting over the same property, and those multiple people had the capacity to pay. You've probably heard me say that before. You have a property, or the value of that property is only as good as the people that are buying it. So you might have people that want to buy a property, but if they literally can't afford to, then they're not going to be able to buy it because they can't afford to buy it. So the capacity to pay is significant because the demand of the buyer needs to be the right demand. So what's happening at the moment is that we're seeing all this negative media press. The banks have come out and said that there's going to be a huge drop in prices. And I said at the start of the year that I didn't think there'd be any more than a couple of interest rate price increases by the end of 2022. And the market, I thought, was going to be softer into 2023. That's actually happened sooner than what I expected. And it looks to be that the interest rates are probably going to go a bit higher than what I originally thought. I thought we were only in for a couple of interest rate rises in 2022 and then a few more in 23. So that's obviously going to play out a lot quicker than what I had first envisaged at the start of the year. So all that means is that this cycle is going to be quick then. So overall, market sentiment is down, is low, but the fundamentals with property is everybody needs a house to live in. And at the moment, across the country, with the exception of certain areas like Sydney and Melbourne, the rest of the country is basically in undersupply, huge undersupply because of the migration out of the capital cities, especially that from New South Wales and Victoria into Queensland. But you've got huge pressure over in WA for property. South Australia is well undersupplied as well. So you've got an undersupply of property. You've got people that have saved a lot of money during COVID. And if you have a look at some of the lives I've done recently, I talk about statistics around and graphs around the savings rate on how much money people are still sitting on. So our savings are still really high. So not only do we have high savings, so capacity to pay, we've got an undersupply of properties. So less properties and the same number of buyers. And then on top of that, so you've got capacity to pay, restricted supply, you've got increase in interest rate rises. Yes, that's great. It's going to affect some people, but for the people that are cashed up, not so much. And then a lot of these people, if you've owned property in the last couple of years, you are going to be sitting on a fair bit of equity. So all you need to do, especially those guys down south, Sydney, Melbourne, all you need to do is sell one property, realise that cash if it's your own home, and then move to Queensland. for example, buy a property that's a lot more affordable, and then you're going to be competing, you're going to be buying in a market that's 50%, half the price of where you've just sold, and get the same property. So it's already happened before. We've got peak interstate migration than that we've had previously. So we're peaking at the moment. It's the maximum amount of migration that we've had for forever in history. So we've got all these fundamentals that all line up to property prices continuing to increase and increase substantially. And then off the back of that as well, you've got material supply shortages and construction prices still on the move up, which is going to put further pressure on the end value, so the end price of the property. So you've got all these fundamentals that are all looking really positive. The only thing that's not positive at the moment in the media, so the only thing that's shifted in the last few months, is the interest rate rise. So property has multiple cogs in the wheel that make it turn, and why values increase the way they do. And one of those is affordability and capacity to pay. So all we're experiencing at the moment is a slight decrease in people's capacity to borrow more money. So those people that want to borrow more money, yes, they're going to be affected. But what about all those people that are already sitting on a whole heap of equity that don't need to borrow so much money? Or what about all those people that aren't geared up to the maximum level, which is the majority of the market? The majority of the market is not first home buyers getting maximum loan to value ratios, so maximum LVRs. It's the majority of the market are mum and dads with equities in their properties. So what we're going to see over the next 12 months, we're going to be in for a bit of a bumpy ride, mostly predicted or mostly influenced by the media, and the media is trying to calm things down with the property market. Otherwise, we're going to keep going ballistic, and property prices are going to keep going up. So, the media is going to hype it up that Sydney and Melbourne are dying really hard and the property market's going to fall. So they're creating a lot of fear in the market. And if we don't have the same level of demand, because now people are sitting waiting because they're expecting the market to drop substantially, so you get a lot of people sitting on the sidelines and waiting. The best time to buy in property is all the time, providing you know where to buy in the right areas and you know how to buy, because you're only buying one property, you're not buying the collective, you're not buying all the properties. So the best time to buy in property is all the time, but the cycle that we're in at the moment is going to be bumpy for the next 12 months, maybe a bit longer, mostly because of the media hype. But what's going to happen after that? So once we go through the next 12 months, 24 months, and I'm just talking about holistically overall, what's going to happen after that point when people aren't building properties, they are sitting on their cash, they're saving more money because they're scared about what the economy is going to do. And then we've got this highly restricted supply in certain pockets within Australia. Rents are still going up, so rents are increasing substantially, especially in those areas where there is a massive shortage of properties. So what do you think is going to happen once we reach that point again? All we're in at the moment is that, I'm going to relate it back to COVID, because during COVID, it didn't matter really what you bought, as long as you didn't buy somewhere, like a unit or something. But, if you bought a detached dwelling close to a capital city, or even, in the regional areas, it didn't really matter what you bought, you still made a huge amount of growth. So we're going to experience the next 12 to 24 months. We might experience in some areas, a drop of 10 or 20%, but those areas have been overpriced. People have been paying silly money for things. Like even just in areas that I've been looking in, people are paying well over list price, like hundreds of thousands of dollars or millions of dollars over the list price. So that pricing is never sustainable. When something doesn't make sense like that, it normally isn't sustainable for a long time. At least in my experience, the market, and it doesn't matter what market, the market always cools. So, when property's running 10, 20% growth, everybody's, a winner, everyone's a genius because they've made all this money in property. But when it comes off by 10 or 20%, who are the people that invest? And they're the ones that are in it for the long term, but also the smarter ones. So for the next 12 to 24 months, and it may not even last for 24 months, these are going to be the best buying opportunities for the next cycle. Now, this isn't going to be the same with every area. Every area's got different cycles and things like that. But just overall, the next 12 to 24 months, watch it play out. You're going to get the best buying opportunities for the next cycle. Our cycles are much shorter than they have been. And the thing that we're riding on at the moment is the lack of material supply, the build price increase, the pressure on the build price, and then the lack of properties. So the undersupply, massive shortage of properties. So that takes time to funnel through. So even if we ramp up building tenfold in those areas, and I'm thinking about areas that I'm involved with, if we ramped up tenfold, we'd probably have enough supply for the next, in 2 years. But we're not doing that. People are holding out, and now with interest rate rises, there's going to be more people holding out or cancelling new builds or cancelling their projects or shelving their projects until, 2 years' time. Then market has flatlined. It started to go up a little bit. We've finished that interest rate rise cycle because it's only going to be short-lived with interest rate rises in the short term. Everyone realizes that the world's not going to end again. So, think about COVID. We got over the initial shock that property markets were going to go down by 30% because that was promoted in the media by banking economists. And then, fast forward out of that when things started to stabilize, stimulus, money started to flow. People realized the world wasn't going to end. There was a lot more savings because nobody went out. And then we just had the biggest property boom that we've had in whatever, period since 1984, whenever it is. So what do you think is going to happen in the next little bit? And then coupled with that, I believe the Labor government is going to stimulate the economy as well. So you're going to have interest rates rising for the next 12 months, maybe a bit longer. Then we're going to stabilize. You're going to have people sitting on a lot more cash. We've got the lowest unemployment rate we've had for a long time. So economy's growing, economy's good, prices have gone up. Then fast forward into next year, you're going to have building prices contract because material supply and chains, transport chains are going to free up, not only with material building supplies, but also, other supplies. So inflation's going to contract. The RBA has already said that we're rising interest rates, and we believe that, in 2023, that the logistics market is going to normalize. Plus also we've got, high commodity prices. So these are only all temporary fixes. So, we might see interest rates go up. They might stabilize, or they might start pulling them back once inflation has been hit on the head and we're back to a normal inflation rate. So when all of that happens, we're going to go through a really quick cycle. I don't think property markets, and especially those in undersupply, aren't going to move. They might stay flat, but now is going to be the best buying opportunities because you've got people that have fear. They've seen the markets come up. Now they're seeing the markets come off, and they're also watching and reading the news articles around property prices in like New Zealand, America, that have dropped by 20-30%. So we are in for a bit of a wild ride, but the next 12 to 24 months, in my experience, it's going to be a great buying opportunity because there's going to be less buyers in the market. You're going to be able to pick up bargains, and you're going to be prepared for the next market cycle, which is going to be quick again. And I think we're going to be in for another really hot 3-year growth after we ride out this next wave, which could be 12 or 24 months. I think our market is going to experience some pretty big double-digit growth after the next couple of years, and that's probably going to be a bit more of a normalized boom market where they normally last for around about 3 years, depending on how much building happens. So it all comes down to supply, demand, capacity to pay. There's other functions and things that play a part as well. But really, in my experience, if you have a look at those main things and main statistics, that tells you a lot about how that market's going to perform. Let me know about any properties that you're looking at. Would love to hear about it in the comments, and if you've been able to buy properties well under market value. In 2022 alone, I've bought only just a few properties to date, and we're really gearing up to buy a lot more properties over the next 12 months, especially because we know that there's great buying opportunities in the next little bit. And there's also really big development margins. There's actually the biggest development margins that I've ever experienced in the last 12 years of developing at the moment. So have a good one. If you like the video and would like to know more, please subscribe. I'll do constant market updates among many other things. Have a great day, and we'll see you in our YouTube channel.